Hello and welcome to Forex.Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we're going to be talking about triangle formations. Triangle formations are another key tool used by technical traders to gauge potential price action moves based on triangle patterns that form on their charts. Such patterns regularly occur, and where traders will draw the patterns onto their screens themselves rather than using a technical tool to do that job for them. The triangles can be used for areas of support and resistance around these triangle formations in order to trade from. So what is a triangle, or a wedge as it's sometimes referred to? It literally is what it appears to be, a triangle based on price action. Traders will identify these areas by drawing lines onto their screen charts, such as in example A. Here we can see a low point and a high point as marked on the chart, and where we have drawn two lines which act as resistance and support, the rules of which require that price action must touch both lines on at least two occasions, which they do at positions 1, 2, 3, and 4. Price action goes through a period of consolidation and becomes wedged to a point that must eventually break out from, either lower or a break higher. In this situation, it breaks higher from the triangle, and where the previous area of resistance at its furthermost point goes on to become an area of support, where the bulls must come in and drive price higher. Example B is an ascending triangle formation. It offers a bullish setup, and where the main characteristics are price action moving higher, with a flat top which is confirmed by at least two attempts of price action to move higher than the area of resistance. Here we can see that the price action trend is higher, and where price action is largely followed by our support line, until the price action flattens off and where we see resistance forming at the furthest point of the wedge. Traders will be looking for a break higher or a break lower from this wedge. In this situation, we have a break higher and a continuation with the overall uptrend. Example C is a descending triangle. This shape offers bearish setups. Again, we have at least two confirmed attempts to breach the area of support and at least two attempts to move higher than our area of resistance. The overall trend is moving lower until price action eventually breaks lower to the furthermost point of our triangle shape. Other shapes in this category include falling or descending wedge formations, where price action is contained within two narrowing lines and is identified by lower highs and lower lows, such as example D. Also, a rising or ascending wedge where price action again is contained in two narrowing lines, but this time identified by higher highs and higher lows, such as in example E. In both wedge shapes, traders will be looking for a breakout as the lines narrow, and where the breaks usually prove to be good entry points for trading the opposite direction as the previous trend runs out of steam. Slightly more complicated are these symmetrical triangle shapes, as an example F, and we would like to identify lower tops and higher bottoms with almost a flag-like appearance, and where we can see our confirmed area of support and resistance is breached, and where price action moves lower eventually, with our initial area of support becomes an area of resistance, and where price action moves eventually lower, with our initial support line becoming an area of resistance. We would usually look for the initial breakout from the first area of price action to reach the peak of the initial high. However, this shape is considered neutral with no real particular bias. The next shape is a bullish pennant and is defined by an initial uptrend with a triangle shape based on a slightly ascending support line with a confirmed area of resistance with lower highs, and where we can expect both a breach higher from this triangle shape formation, such as in example G. Our final shape in this series is the expanding wedge, which, as the name would suggest, is an area of price action that expands as it moves forward, as in example H. This might typically occur as extra volume enters the market after a period of tight consolidation. If you enjoyed the video, then please like and subscribe, and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.